Imagine buying a life insurance policy, confident that your loved ones are protected, only to find out it might not pay out when they need it most. It is a concerning thought, isn't it? Understanding the rules around your policy is key to ensuring that peace of mind truly lasts. During the contestability period, typically the first 2 years a life insurance policy is in force, insurers can investigate claims and may void a policy if they discover material misrepresentations or fraud in the application. This means if information provided during the application process was incorrect, incomplete, or intentionally misleading, the company has the right to refuse to pay the death benefit. The primary reason an insurer can void a policy during this period boils down to the concept of accurate risk assessment. When you apply for life insurance, the company evaluates various factors about your health, lifestyle, and financial situation to determine the risk they are taking on and how much your premiums should be. If critical information was withheld or misrepresented, like a pre-existing medical condition, a dangerous hobby, or even income details, the insurer was operating under a false understanding of the risk. They need accurate data to offer appropriate coverage and pricing, and misrepresentations undermine this fundamental principle. To help ensure your policy remains valid, always be completely honest and thorough when filling out your application. Double-check all medical history questions, provide accurate details about your occupation and hobbies, and disclose any prior health conditions or diagnoses. If you are unsure about whether to include something, it is always best to disclose it rather than risk it being considered a misrepresentation later. For example, if you had a health issue years ago that you think is resolved, mention it and let the underwriters decide its relevance. It is also important to understand the difference between a simple mistake and a material misrepresentation. A minor error, like a misspelled street name, is unlikely to void a policy. However, a material misrepresentation is information that, had the insurer known the truth, would have caused them to decline the application, offer different terms, or charge a higher premium. Most insurers will clearly outline what constitutes material misrepresentation in your policy documents. Also, remember that some policies might have a longer contestability period in specific circumstances or states, so always review your individual policy details. Ultimately, the goal of the contestability period is to protect both the insurer and honest policyholders from fraudulent claims. By being transparent and precise in your application, you guarantee that your policy truly offers the security you intend for your beneficiaries, providing genuine financial relief and upholding the trust between you and your insurance provider.